Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 3 o'clock in New York. It is Friday, happy Aloha Friday as we say on the islands, December the 11th, 2015, and this is Trending Markets. We do have equities markets under tremendous pressure today, off right now about 268 points, a triple-digit decline. As we look at the Dow, it's currently sitting at 17,306, and that is off of a low of 263, so we are off of the lows, but not off of the lows by that much. You can see that here on this daily candle. Of course, tremendous pressure. And the question is whether or not we will find some sort of support in the particular area of these lows that we got back in November. That's right in here at around 17,200. So that's a question we'll have to see how it plays out in terms of next week's activity. Of course, we have the FOMC meeting that is scheduled to get going next week, and my sense is that once we get some sort of an announcement by the Fed that they are going to raise interest rates, I think we will see some kind of a relief rally in that we finally implemented what the Fed has hinted at for such a long time. Standard & Poor's 500 vis-a-vis the mini currently trading at 2009, off about 32 points or 1.5% lower, low 0.3 and the high 47.75. So traders, I want to start today's show off by taking a look at this daily chart. The daily chart, of course, is of the E-mini S&P 500. We have a couple of things that are noteworthy in here. First, we do have a fib retracement. The retracement covers this area that I've just encompassed, in which we're looking at these lows here, which come in roughly at 1821, up to these highs at 2109. Of course, I draw your attention to the 38% resistance level at 2003. That comes in right at this level right here. Also matches quite eloquently with the low. That is the low of the day, 2003. So whether or not that particular area holds is going to be of interest. As I said, we've only got about an hour left in trading. So the question is whether or not when this market reopens on Monday, because I think that the damage we've seen is pretty much done for the day, but whether or not this particular level here, meaning 2,000 in the S&P, is going to hold. Because if you recall from yesterday's activity, we initiated a position. We got stopped out quickly in one day because what in essence I saw, this is that single candle. And during the day, when the market was trading higher, rather than just being a small green candle right in here, this green went above our 200-day moving average here and definitely above our 50-day moving average. And that was what triggered that buy signal. Of course, my recommendation was that if it broke back below the 200-day moving average, that's where our stop was at 57. So we did knock ourselves out, and we knocked ourselves out with a 6-point drawdown on the trade. But my sense is right now, once we have broken through this particular point, it could be a little bit more ominous. Now, how will we know? Absolutely, if we see this market begin to trade and break below this key 23% retracement level, then the next real area of support doesn't really come in till about 1980, and it's based upon these series of tops here. The larger picture, of course, is the next retracement level. You've got a 61% retracement level here. 1970 is our 50% retracement, and 1937 is a 61% retracement. Although I'm not looking for the market to move to those levels, these would be the levels that we'd want to watch, 1980 and 1970. My sense is that we will see this market find support in this area. It has touched upon these lows of 2003. I am reluctant to put on any position prior to the announcement of whether or not rates are going to be raised, and that's going to happen. It will start on Tuesday, conclude on Wednesday. But as I said, my sense is that should rate hikes initiate and liftoff begin next week, I think that we're going to see a relief rally. I think that it's going to take a lot of uncertainty out of the market and allow us to go into this Christmas rally. If in fact we did not see a rate hike, and I don't think that that's likely at all, the volatility is going to increase, and who knows what we would see in the market. I'm not convinced that we would see a rally based upon that, because we would still have uncertainty in the market. So we'll have to take a look. We are going to go into the weekend flat with no active trades, but we are going to look to initiate a position in the E-mini Standard & Poor's. I'm looking at the potential from the upside. I think that that's the play we want to make, especially if this particular area holds, meaning 2003. We could see it move up substantially, and these record tops here could be taken out over a period of, call it the next 2 to 3 weeks as we go into the end of the year. On other markets that were interesting, total meltdown in the oil market. We'll look at that in a second, but I do want to take a quick look at the dollar. Dollar did trade lower on the day, trading off about, call it almost 0.4%, 97.56. And when we take a look at the market in terms of our daily candlesticks, and that's what I've just pulled up, you can see that we attempted a rally last week. We sold off pretty hard. And then, of course, this week again, we had the market attempt to stage some sort of a rally, but it was unable to do that. When we look here, we also have a 250-day moving average, and it looks like we are going to close just under the shorter term or the 50-day moving average itself. And last, I want to look at crude oil, because crude oil has absolutely fallen out of bed. 35.64, down another dollar plus a barrel, a 3-point decline in the market. There's an absolute glut of oil right now, and according to some statistics in terms of supply and demand, we are overproducing by 1.5 million barrels per day, the quantity that our current supply or our current demand is actually calling for. You can see that we've broken through the most recent lows. Most recent lows were sitting, at around 38. That's this low right in here. We've broken through there substantially, and we've gone to lows that we have not seen since about 2008. So we'll have to see where oil goes. It's been a most interesting week, and I think next week promises to be a week filled with volatility and excitement. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another Trending Markets. Bye-bye.